Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. Joining me today would typically be the man himself, the governor of real estate here in the great state of Texas, Mr. Michael Becker, but unfortunately he's on another due diligence assignments, buying another property for those good guys over at SPI. So in the podcast today, we have the professor. You know him, you love him, Mr. James Eng. James, how are you?
Good. Thanks for having me, Paul.
So tell us, James, a little bit, we've been very busy over at Old Capital. Tell us some of the things that are go on coming into March.
Yeah. Yesterday, just a couple days ago, we had our lunch and learn with property management company. And coming up here in March, we've got our bus tour at the end of the month. So last Friday of March. And then we actually just announced we're doing a virtual speaker series with Jeff Adler of YardiMatrix in April. And then our conference, if you want to put it on your calendar, October 8th and 9th is our conference here in Dallas. And then the last thing I'll mention is we sort of started, I like to call it I don't know if it's a fraternity.
Fraternity,
is the right
sorority,
word.
whatever.
Fraternity, sorority, whatever you want to call it. But we're calling it's called Old Capital Connection. And it's really for investors, accredited investors who are focused in on multifamily. And the way I like to think about it when I was back in college was you sort of had a secret handshake for your fraternity or sorority. And this is the same way of this. Like people who have listened to the podcast, people who have come to our conferences, who have done loans with us, just the way that they can stay up to date with everything that's going on with Old Capital and just hear what's going on. So I put a link on oldcapitalpodcast.com and it has a link to all the events. And it also has a link to join that community. So if you're interested, go on there, fill out a form. It's like basic stuff, but we just want to make sure you're not an AI robot. Just make sure you're real. So before we'll let everyone in.
Tell us about one or two things that are in there, because I think it's fascinating is that, when you're part of the club or part of the secret handshake society at Old Capital, some of the things that people get that nobody else gets, nobody else is doing it, especially on the macro level of multifamily in the nation, and then the micro level of Texas and in Dallas. Tell us a couple of things that are going on.
Yeah, I mean, we'll have, new deals that come out that, while we're out on the property, we'll take some pictures, we'll drive the property, things like that. So you'll have listings, you'll have GP, LPs are introducing themselves, market updates that we see that maybe we don't put out in an email, and you get like a little alert on your phone that what we're seeing real time and, any lending updates that we see. And then it just sort of brings everything in one spot. And then it's a little app on your phone and you hit the button and you're sort of dialed into everything that's going on.
Yeah, it's some great information being pushed out to you if you're interested about being up to date about what's going on in multifamily investing. Today in the podcast, we have some friends of ours that we've known for a long period of time that I think that you want to get to know. One of the gentlemen in the podcast, a gentleman named Nick Fluellen. Nick and I have known each other for a long period of time. In fact, I think, James, he was probably in the first 5 podcasts that we did back 9-10 years ago. Oh, number 2. He's telling me number 2, the number 2 podcast when it first came out. And so it's been downloaded and listened to, I would say probably 150,000 downloads. Just listen to Nick talk a little bit about it. And Nick is a premier investment sales broker over at our friends with Marcus Millichap in the Dallas-Fort Worth office. So we'll have Nick talk a little bit about what's going on in the marketplace, but he's brought with him today, and I'm going to call this, James, did you ever watch Robert Redford in The Natural? Do you remember that movie?
It was before my time, I think.
Oh, come on. I'm not that old. The Natural, where he was a baseball player. He came in and he had a bat, and the bat had a name on it, which I thought was kind of appropriate for this guy, in that on the bat, there was a lightning bolt. And the one thing that it said is Wonder Boy. And this guy is really, he bats with a hard bat. He is the wonder boy over at Marcus Millichap. He sells apartment buildings in the Dallas-Fort Worth, North Texas area of 75 units and below. So if you're just getting into multifamily and you're looking maybe to do your own deal, or you're looking to do a smaller transaction out of the box, Chris Pearson over at Marcus Millichap in the Dallas-Fort Worth office, he's the guy that you want to talk to. So we're going to start our conversation with Nick and Chris Pearson. James, I'm going to turn it over to you a little bit and let's start the conversation.
Well, yeah. So Nick, maybe started off with, NMHC was pretty good. I felt pretty positive, and since then, 10 years down, 30 basis points. So I feel like the momentum is coming, and now instead of just seeing like one listing a week, I'm seeing 10 hit my inbox a day. So there's momentum. What are you seeing out there?
Well, first of all, I'm definitely not going to let the fact that you have not seen The Natural pass without calling you out, because that's one of the greatest sports movies of all time. And
I'll watch it on Netflix tonight.
You have to watch The Natural this weekend. If there's anybody out there listening to this that cares about sports at all, you have to see The Natural. And that's like a top 5 all-timer. So
I'm more Remember the Titans.
Oh, okay. Well, that might be also be top 5, but
Yeah.
The Natural, that's a classic. So anyway, and then also going back to the number 2 Old Capital podcast. There's no telling how many people have used that to go to sleep 150,000 times. Just to hear my voice as they're going to sleep at night. That's an honor. So no, it's great to be on. I agree with you, James, that NMHC was very positive. The sentiment was, was definitely more encouraging than last year. And I think at the simplest level, we're a year further into this market, which means we're a year further away from, we're a year closer to getting out of it, I guess. And so how is that manifesting? I think you're seeing exactly what you said, a lot more inventory. I'll tell you this, in the last 30 days, we've done 71 BOVs, which is an absurd number for us. And by the way, last year, which 2024 was the highest BOV count we've ever had in the 20 plus years that I have been in this business. And I think we're going to shatter that this year. And
what is a BOV? A lot of people are listening to this are just making the transition, let's say, from residential investing to multifamily, and they may not know some of our jargon. So
no, that's
tell us
good.
a little bit about that mean.
So a BOV is a broker opinion of value. Some people will call it a proposal. Some people will call it a BPO, broker price opinion. But when somebody is interested in knowing how much their asset is worth, they'll engage a broker to give them a price opinion. And so that's what we do. And so we'll underwrite the deal, look at what other comps have sold for, look at what we think the upside is, look at the debt and equity situation on the deal, and then come up with what we feel like the deal would trade for in the current market environment. And so the fact that we're doing so many of those right now is a good indicator that people are either at their wits' end and ready to move on, or just want a snapshot today because they see the light at the end of the tunnel. As James said, the treasury has cooperated since we've been back from NMHC. But I think one thing I heard at NMHC from our research team was in the last couple of years, we've had a 50 basis point swing up or down 16 times, which was an insane stat for me. And I knew, I've lived it, you lived it, all of us have lived it. But that I thought was a pretty, it's a good indicator of just how volatile it is. It's like we can handle the treasury wherever it is, but it's the volatility that really has caused you guys heartburn and caused us heartburn and caused buyers heartburn and sellers heartburn. Because, if you think you're going to get one interest rate and then all of a sudden you see the 10-year go up 50 basis points, you lose a ton of proceeds, you lose a lot of cash flow, and you have to go out and raise more equity. So it's like a triple whammy. Anyway, I love where we're headed right now. I'm optimistic that we're going to be in pretty good shape, but that's, I agree with James that we are seeing more deals on the market right now, and the sentiment overall is a lot more positive. Now, we also have the situation where, do we really have that many more buyers in the market yet? Probably not. And so all of a sudden now you have a lot more supply with the exact same amount of demand. So you have the same number of buyers chasing more deals. And so we'll see what the impact of that is. But, I do feel overall a lot more positive than I have in probably the last couple of years.
Yeah, I was on a property tour yesterday and the broker sort of wrapped it up and said, well, thanks for coming out. We'll probably have 50 tours on this deal. I'm like, thanks for letting me know. That was a signal that if you're not at the Whisper, don't waste their time. There's a lot of Class A buyers. I get that. But I think just the amount of inventory that has hit the market, there's a little bit of like buyer fatigue to some extent. Like I can't look at all these deals. I can't underwrite all these deals and make offers on all of them and like really dig in to these deals because there's too many. And the buyer I had lunch with yesterday, I was like, you got to just pick one or two and just really dig in, because if the broker knows you're serious on this deal, then maybe we can actually make a dent.
That's right.
Yeah.
Yeah. Well, I think that's a good point, because I think as we're pricing these deals, sellers need to realize their deal needs to be compelling. Otherwise, it's in danger, even if it is compelling, of just being another deal out there. And if it's not compelling and there's not something that you are really grabbing people's attention with when you're, doing your marketing or reaching out to people, then you're absolutely right. Like, I got a lot of other options right now, so I'm going to go focus on them. So yeah, I agree with that. Now, it's not necessarily what every seller wants to hear, and I understand that. But at the same time, it's like, well, when we need to deal in reality, otherwise we're just wasting all of our time. And that's,
we're just in the batting cage.
Yeah, that's right.
We can stay in the batting cage all day and hit as many home runs as we want. But unless you can really get a deal done, we're going to do 50 tours. But at the end of the day, if the seller, like if you tell the seller, let's make up a number, $25 million, and then everyone bids 20 and we did 50 tours, it's sort of a waste of time. Everybody's.
That's right. Yeah. Well, and I'll loop Chris in here because, we were talking about all of our activity, but in our 75 unit and under space specifically, when we have done and had that as a specific team segment of ours for 10 or 12 years at this point, but we've never had more momentum in that space, even when the market was good, than we have right now. It's been fun to see Chris and our 75 unit and under team really getting after it and getting a lot of opportunities and bringing a lot of these deals to the market. And the response has been very positive. So, Chris, I don't know if you have any other thoughts about that.
Before you jump on that, let's just talk. Before we get the Wonder Boy out of the batting cage and start hitting the big stick, I want to talk a little bit more about Nick and his team over at Marcus Millichap, because he does have the data points. So Nick Fluellen and his partner, Bard Hoover, run one of the largest groups within the Marcus Millichap system. So they have a tremendous amount of data that's coming in because Nick oversees this group. Chris is one of his team leads that works in the 75 units and below group. But Nick, tell me a little bit more about how many people you have. What are the segments you guys are in? And then we'll come back to a little bit where I see the market at right now. And then I'll have Chris talk a little bit about that.
Yeah, so we've got 25 people on our team, and so 20 of those which are producers. We have 3 different segments, and really about to add a fourth segment. But the first segment is just larger deals in DFW. Sorry, the 76 plus unit deals in Dallas Fort Worth is one segment. The second is 75 unit and under deals, and the reason we have kind of bifurcated that the Metroplex is just because you have a different set of vendors and buyers in the 75 unit and under deals. And they're just a very unique set relative to, say, a 250 unit deal. We've figured over the years that it just works really well to really have guys focus on that particular niche in the market. And then we have a secondary markets team. And so we are covering deals and markets all over this region. And so East Texas, West Texas, Central Texas, South Texas, Louisiana, Arkansas, Oklahoma, New Mexico. We've done deals in all of those places. We've gone as far up as Kansas and Missouri as well. So That's kind of what we're covering. We also are trying to make some inroads in the affordable housing space because we've done a number of those deals. And then with the rise of HFCs and PFCs and just the number of LURA deals and LIHTC deals, low income housing tax credit deals out there, that's an area where we'd like to potentially do more in.
So the market, as I say, James, we talked about this at the Old Capital Lunch and Learn this week, is really where I see the market at. So it's like I worked out at the gym this morning. I had a barbell in my hands, and the one side was a weight on the right-hand side, and there was a weight on the left-hand side. On the right-hand side, that weight was, I would indicate, would be the institutional buyers, the people that have 40, 50, $60 million price targets to find properties at, and they're usually looking for the Class A properties. They kind of have unlimited capital of what they could buy properties at. And so those are the groups that Marcus Millichap or JLL, or when I say Marcus Millichap, I talk about the institutional property advisor group that Nick and his team have over there. But some of the institutional buyers are on that right side of the barbell, unlimited capital, buying the Class A buildings. And then the post or the pole that goes all the way down goes down to the left-hand side of the barbell. And those are the people that can want to buy apartment buildings, but they can only raise. They're limited by the amount of money that they can raise in terms of equity. They can raise $1 million. They can raise $2 million. They may be able to raise past the head and raise $3 or $4 million. So you're kind of limited just today by the amount of money you can raise, in whether it's your money or in the syndication model. And so there's that post that goes between the smaller capital raises and then the right-hand side, the unlimited capital raises. And it's very difficult to raise money between maybe 9, 10, 15, $20 million in equity. And so that market is a little bit quiet right now. There's not a lot of people that can raise that amount of money. But Chris Pearson and his group over at Marcus Millichap of the 75 units and under are in that left side of the barbell. They're the ones that are selling the $4 million, the $5 million properties, the ability to raise in your circle of friends and influences, you can raise money to buy these properties. So Chris, tell us a little bit about what you're seeing in the market today, and maybe you could talk a little bit about a deal that you closed recently that tell us a little bit about the structure.
Yeah. First of all, thanks for having me. Let me be part of the conversation. I think if you had gone Benny the Jet Rodriguez or Smalls, James would have known the Sandlot, and we could have pulled him into the sports analogy, but we'll get it next time. Yeah. It's been interesting. I was thinking about what Nick said, first of all, about the 10-year moving 16 times. And think about this, since I've been doing this with you guys, it's all I know. I'm like a child born during the war. I'm like, please, Papa, tell me about the good old days. Like, it's just all I've known is this since the beginning of it. And so it's interesting now because I've heard you guys, just talk about it for so many years about stability and when deals start to move. And we're actually starting to see that on the smaller deals. And it's been really interesting because you think you're busy, and then all of a sudden we're actually busy now. And you're like, oh man, this is a lot. And there's thousands of phone calls coming in every week. And, all those owner operators that were kicking the can, like we're doing those BOVs now, and we're starting to get to bring those deals to market. And so, yeah, like Nick said, I think that, we have a momentum on the smaller stuff that I've never seen, I've never got to be a part of. And so it's been really fun. I think the last 60 days has been very telling of exactly what you just said, Paul, about the ability to go in and raise equity amongst family and friends or just smaller check sizes. And so it's starting to heat up. We got one under contract yesterday. We have another one that's going under contract today, and just closed one on December 30th. That was a smaller deal here in Dallas. It was actually, it's 80s vintage. It was a 5.3 cap, which it was interesting. We haven't seen a whole lot of stuff trade in the low fives. So yeah, it's been kind of wild the last 90 days. I think Nick told me it was coming, and now we're here. And to an extent, we're trying to keep up with a lot of it, and we got a bunch of stuff coming out here in the next 30 days. So,
Chris, what's the good old days for you, man? Is that like positive leverage? Is that like where you could do a webinar and you raise $10 million in 30 minutes? Like, what's the good old days? What does that mean?
The good old days for me or the good old days for you guys?
Good old days for, well, yeah, good old days for us that you hear about grandpa on the rocking chair.
It
Like, what
seems
is
like
that?
it seems like a fable to him.
It does. I'm like, no way. It feels like a bit or a
Like
prank.
ancient times.
I mean, think about, I got here, I think my official start date, I started with talking with Nick and Bard in December of 21, and I'd retired from my previous career. And, I was really wanting to come learn this business. And Nick was kind enough to take a shot on me with Bard and the Marcus Millichap crew. But I think my official start date is July 22. So if you think about the timing
That's like
of that,
the first rate hike from the Fed.
and everyone's kind of freaking out up at the office. And I'm like, what's the big deal? And
What's the big deal? SOFR's
like
0.75. What's the big deal, guys? Come on.
Yeah, literally. So that's all I've known for, three plus years is like I said, it's like being born in the hospital and the mortars are going off over your head and everything's in rubble outside. And you're like, no, this is just the normal, this is life, right? And turns out it wasn't. Turns out you boys used to just rip through deal. I mean, it's incredible to hear those stories. I'm like,
tell us about the deals that you made during the war. Like,
well,
who's the buyer, who's the seller? Like, you don't have to give names, but give us the profiles. Give us the profiles of people that sort of, why were they selling, and then the buyer, how did they come up with the money, all that stuff, as much as you can. Just pick a couple.
Yeah, I think a lot of first-time buyers, right? I mean, it sounds, again, the old days, a lot of deals were trading to the same people. You had the same usual suspects outbidding each other. And by the time when I really showed up and started understanding the business, like, we had a whole new buyer pool, which was really interesting because it creates opportunity for a lot of people out there listening that they didn't stand a chance of winning a deal, it sounds like, in 2021. And now they do. And so we've seen a lot of out-of-state buyers. We've seen a lot of first-time buyers, a lot of guys here in DFW that were trying to win deals that just couldn't. And they have a legitimate shot now. So I think in a funny way, it's leveled the playing field. You can really go out there and hustle and communicate with the broker and communicate with the seller and, raise the equity. Like, you legitimately have a shot to win a deal now. And to my understanding, that was just not, it was infinitely harder in 2021. Is that fair to say?
Depends on the vintage. I think it's like wine, right? There was the class of 21 and 22 that we talk about. This class of 24 and 25, there's a lot of new guys in that space. The same way that, the household names today, like whether it's NightVest or S2, these guys who have, done 60,000 units, they came up in 2010, 2011. Like, it's going to be the same thing. Like, you don't really know who's going to come up out of this reset that we just had on pricing. Yeah, I mean, you guys are in the right space, starting with those people, because, cool. If you listen to David Moore and NightVest, they bought a 30, 40 unit deal and he was in the office every day because they didn't know any better. So,
well, I think that to answer you and Paul's other question, I mean, obviously a lot of our seller profiles on the smaller stuff, they might own 2 deals. A lot of them own 1 deal. And so their hang up in selling has been, we have one lady, she's a wonderful lady, and she calls this property out in Fort Worth her safety blanket. And she knows she's needed to sell it for years. She keeps hanging on, and it keeps getting more dilapidated, and it's really interesting. And so a lot of those owners on smaller deals have finally kind of had that come to Jesus moment, or that, oh my gosh, I think it's time. And so we are starting to see a lot of that 60s, 70s, 80s, even into the 90s, 75 units and smaller. Like, we're starting to see that loosen up. Those people are actually like, okay, it's time to cycle through this stuff. And so,
what do you think you have to price 60s, 70s, 80s stuff? What do you think you have to price it at to get buyers off their chair, off their podcast, and into the car to come tour a deal right now? Like, what's needed on a sort of cap rate basis, sort of going in on those deals?
Yeah, it's a really good question, not to copy your answer earlier, but it depends on the vintage, right? We have a 1961 deal that's out right now that is like a true 10 cap. Like, we've never seen it. It's a bit of an anomaly. And then we have an 80s, a smaller, super clean deal right on the Garland Rockwall border that's out right now that's a 6.6 cap. So, I'd say, and then we have some stuff, we have some a product that's smaller that is sub 5. So I still almost feel like there's always a 125 bips between A, B, and C. At least there has been since I've been here. I think that, we're seeing some of the older stuff. I'm thinking 7.25. We still are trying to price the good 80s B stuff in that mid 6, maybe pushing just below. And then, we haven't sold a whole lot of new stuff on the smaller side. We have an interesting one right now that we're working on, and we're still trying to make sense of it. So.
Well, and I would just say, you just have to know, as I know y'all do better than anyone, it ebbs and flows. When we're talking about a 50 basis point swing in the treasury, that changes the cap rate quite a bit. If it goes up, then you got to adjust the cap rate up. And if it goes down 50 basis points, then people all of a sudden, might get a little more aggressive than they were before. So, it's there's not a cookie cutter answer to what does it take, because it just depends on what the debt markets and capital markets are doing at the time. But I will say this, the products that you guys have where people can rate lock early and take that off the table sure make our life a lot easier. Agency executions sure make our life a lot easier. It's the non-agency deals that are a little tougher to predict because, the debt is just, a moving target, and equity is tough. Like, does anybody really want a deal that's not cash flowing that well, even if it's got massive upside and a higher equity multiple? Do they really want to put?
Yeah, they're telling the GP, I already got 5 of those.
Yeah. And by the way, I got this money sitting in the bank making almost 5% with no risk, and so, now granted, you can leave that money in the bank for 5 years. And by the way, it's not going to be making 5% probably a year from now or 2 years from now, and certainly not 5 years from now. But even if it was, you made 5% on your money over 5 years, each year. So you've got a 1.25 equity multiple. That's what you're weighing, right? You're like, hey, do I want that with no risk, or do I want the chance of buying a deal at a crazy low basis right now that could be a 3x, but without a lot of cash flow for the first couple of years? So, I don't have a good answer for it, but I'm just telling you that's the world we live in right now. Those deals are harder to sell, they're harder to finance, they're harder to get equity for. But I think when people ask me like, oh, who's going to come out a winner as we look, forward, I would say based on the last downturn, the people that stayed active, when it was really tough to do deals, came out smelling like a rose when the market kind of got back to normal.
Yeah, they look like a genius. And they're like,
for sure.
How come everyone didn't buy deals back then? It's like, oh, you didn't realize that equity was impossible and you had to buy the deal all cash at the time. But, going like, so Chris, in 21, if you put a deal under contract, you had $1 million sitting at the title company. And if you went back to the seller and said, hey guys, I need like 50,000 off, that email was not returned. If you send an email now and say, I need 50,000 off, the broker calls you in 5 seconds. Right.
Gosh,
so
yeah.
Like, how have terms changed on LOIs? How are people navigating that amount of volatility in the treasury? I mean, everyone hopes it stabilizes around 4, the 10-year, but how are they managing that?
Without giving out names, Chris, the last deal that you guys just put under contract, what were some of the general terms? Did they go with hard money? Was there?
Well,
how did that look?
Yeah, that one did have hard money, and the one we closed in December also did have hard money. And I will say, Nick and I hear this all the time. On our people that people call and say, we hear nobody's doing hard money. And my answer is always, the people that are winning deals are still putting down hard money. It's just
a little bit less. It's just a little bit less.
It is a little bit less. To James's point, out at NMHC, I told the story to dinner, but kind of the same flow of conversation. And it's funny from my perspective, because when I got here, everyone was like, we've never retraded. Like, that was a big like thing. It was like, it was on the questionnaire. Yes.
Have you ever
retraded a deal? That's so funny to me, because now it's like, it's just so far removed from all that. So terms have changed. Nick, I'm thinking about the one that we finished up in December, the seller was refining 2 properties, selling a property, and selling a property that were all cross collateralized. It was like a Netflix movie. I mean, I never want to do that again. We got it done. It was truly amazing. It took about 400 people to get it done, but that was interesting because the buyer maybe should have retraded based on a couple things, but he didn't. The deal we just got under contract this week maybe could be the case, but I think because in the smaller space, you do have, since more offers are starting to kind of flow in, I think people are like, hey, I'm willing to take a little bit more risk that I'm going to be able to make this thing work because the competition is starting to heating up. So I feel, Paul, like it's ebbed and flow. It's ebbed and flowed a little bit. I think that earnest money still goes a long way for sellers, even like James said, even if it's a smaller amount. And hard money speaks volumes. And I'm still seeing a 30-day DD with a 60-day close. The sellers are starting to push on that a little bit just because I think everybody has PTSD from not knowing where the 10-year is going to be in 90 days. And so I've heard Nick say this a bunch to our clients. Like, I do feel like we found a range where you can actually solve for your metrics right now. And so,
and I also think, I mean, of course, the big push is hard money, which is great. And it's still the number one predictor of a person closing a deal. But I think the other thing we're really trying to vet is how quickly can we get you rate locked? How quickly can you move, get rate locked? And because it costs money to rate lock. And so that's a greater commitment to the deal. But B, you're freezing and locking in the largest single variable in the deal, which is your rate and your proceeds, right? Collectively. So I think those two things, a guy has hard money doesn't mean he's going to buy. We've seen people walk hard money, but a guy that's got hard money and rate locked, I have yet to see one of those walk. That's, I think if I'm looking at a couple of variables, that's kind of the dream combination now, as opposed to just hard money, which was kind of the sole predictor and almost 100%, predictor for a lot of years prior to this last couple of years stretch.
Yeah, talking about predictions, we talk a little bit about the dumbbells on the institutional side with the unlimited capital. But I really think that Chris and his 75 unit and under team over at Marcus Millichap are really poised to take the lion's share of the business, because everything comes down to the ability to raise equity, raise capital, put money into these deals. And it has been challenging. The people that bought the 25 or 30 or $40 million deals back in the class of 21 or 22, they haven't gotten distributions. And so they're not putting the money back into these deals. But Chris is looking for buyers that have found maybe if they're going to buy a $5 or a $10 million property, that group may have never been exposed to the class of 21, 22, and they're out looking for new equity partners to put money into these deals. So it really comes down to the strength of not only the operator that's going to try to put the deal under contract, but again, when Nick talks about hard money putting into the deal, you just want to make sure that you have the ability to go out there and find people that are committed to going forward and buying these deals. So, I think that's where the energy of the market is on the left side of, the non-institutional and the non-groups that are trying to buy the $25 or $30 million deals. It's really the $4, $5, $10 million deals. That's where the energy is of the market right now. The people just coming into the market wanting to find opportunities. Now, these properties that were built in the 80s that may have what Chris was saying, that's a unicorn. If you're going to look for a deal that's going to be 4.5, 5 at a cap rate, you're looking really at 6, 7 plus in terms of a cap rate. That's where the market is. So, you may have to take a look at some properties. And then another thing that Chris will tell you that I will also reiterate is that when you go to the property, make sure you walk the property with Chris and one of his team members and spend some time in the property. Don't try to criticize the deal when you're on the property. They're looking for actual feedback. They want you to put a bid into the deal that you think you can execute. They need market knowledge. They need market information that they can push over to their seller to show them the transactions that have gone in and that have closed, but also to the people, the buyers that are coming in right now, what they're expecting for cap rates to buy these properties. So make sure you give them up, what your feeling is, what you could do. So set out a non-binding LOI That's what Chris needs when people go walk these properties. James, anything more to add to that?
We've told people what the market is doing right now. What sort of the final advice you guys have for guys coming into DFW? Maybe they're coming in from out of state, or maybe they're coming from their IT job or attorney job or doctor job, and they want to buy a 50-unit deal. What's sort of like your checklist of, 2 or 3 things that, whether it's from the initial contact to the tour, anything on your list, maybe give us some best practices for guys coming into the market.
I would just say, number one, when I've got a group that I don't really know that well because they're new to the market or for whatever reason, I'd like to have them look at as many deals as possible. A, I think it helps them get more comfortable. And B, the more time we spend together and get feedback on a number of deals really helps us dial in, exactly what the right deal is for that particular person. And so I would encourage everyone to go look at as many deals as you can. And as Paul mentioned, put an offer in at what you think you can perform at, because I don't care how far off you are of Whisper. I mean, there's so many deals that have traded at an amount lower than what the initial target was. And so I would just encourage, you're not going to offend us. Even when the market was good, we encourage people, put your number on it. Let's see what happens. But right now, more than ever, I would say, put your number on it. Let's see what happens. And you're not going to win deals if you don't get LOIs out there. And so I do think there's a value in getting LOIs out there, not carelessly, but tour the deal, put your number on it, and we'll see how it shakes out. And again, for us, the groups that are constantly touring and making offers are very much top of mind. And so even if we see a deal that's not going to come to market for whatever reason, if we have just toured 4 deals with you in the last 30 days, you're the squeaky wheel is getting the grease, right? Like we're going to be thinking, oh, well, maybe this one's a better fit. That's my biggest advice for the investors entering the market. Obviously, having your ducks in a row and making sure you're good on the debt and the equity, and you feel good about where all that's coming from, and you understand the different types of debt programs out there, and that sort of stuff. That's obvious. That's basic. That's super, super important. But as far as some little intangible things, I think there's a tremendous value in just seeing deals. Even if you don't think it's going to be the right deal for you, I would still go tour it. So, Chris, I don't know if you have anything else to add to that.
No, that's really good. That's exactly what you and remember doing that with hundreds of buyers when I was running point on y'all's deals or running tours for you guys. And the more, just to reiterate that, like I remember there's one group and they eventually were awarded, one of our deals, and they probably toured 8 times, and it was like the 9th deal I ran for you guys. And so I think that's really good advice. I was thinking about just the hope, or kind of, we have a lot of really great stats that come out from Marcus and Millichap. And one I heard on a national call a couple weeks ago was like new construction in DFW is down 41%. Wasn't that right? Wasn't it 41%, 40%? And so this, this supply, is it more than that? I thought I was remembered as 40%. It's a significant amount. And so that supply is getting chewed up and absorption's coming in. And so, we heard this a lot out of NMHC as well. Like I heard the words tailwind in Q3. I'm calling it a light breeze, but I'd never a tailwind. I'm like, oh, there's only headwinds in this business. So, just I think there's a lot of, I say all that because there's so many people that we've talked to. Maybe they own a deal. Maybe they've been trying to win a deal here in DFW for a really long time, and they've just been beaten down by those wins. And I think we have a really good window here, 9 to 12 months of like, it's a really good time to buy, and you don't have as much competition as you might Q2 of 2026. And so, yeah, I think just to encourage everybody of like, hey, even if we talk to you 20 times and you never awarded a deal, like just keep getting in touch, keep hanging around the hoop. I really think that is the best way to be awarded these deals here in the Metroplex. So, yeah.
Sounds like a great way to end the show here. So, Chris Wonderboy Pearson, what's the best way for people to get in contact with you?
Yeah, just my office line is 972-755-5297. Chris.Pearson at marcusandmillichap.com. It's great.
And then Nick Fluellen, the velvet tongue devil, Mr. himself.
Wow, that's a new one.
That is a new one.
What's the best way to get in contact with you?
Just call Chris. No, I'm just kidding. You can
That's so
you
true.
can go to multifamilyadvisors.com is our team website, and that's got my phone number and email address on there. And we love to hear from people that we don't know. Love to hear from people we do know. So we're excited to start working with some new folks and get people's foot in the door and get this market humming again, which I think it will be doing in short order. I like that. Tailwinds coming in 2025.
There you go. James, anything more?
That's it.
All right. Nick Fluellen, thank you very much. Chris Pearson, thank you. Appreciate it. James, the Professor Eng. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.